Let me guess, your agency is consistent in closing deals, experiencing $20,000, $50,000, even $100,000 months, but you still feel like you're living invoice to invoice, or you're still stressed every time payroll hits. And I can tell you why. I've worked with dozens of digital creative agencies, and I see the same three mistakes killing cash flow and profitability over and over again, keeping CEOs in a financial fog, feeling stressed, stretched, and stuck. So if you've ever looked at your numbers and thought, I should be making more than this, stick around, this video is for you. Hi, I'm Sherelle T. Martin, founder and CEO of Nitram Financial Solutions, where we teach bookkeeping without boundaries. We help CEOs and teams eliminate financial chaos, fix money leaks, and build scalable bookkeeping systems so they can increase cash flow and maximize profits without overwhelm. Want to learn more? Be sure to like, comment, and subscribe. Now let's dive in. Mistake number one, you treat revenue like it's cash. So here's the truth. Revenue is not real until it's collected. And even then, it's not truly yours until expenses, taxes, and delivery costs are all handled. Creative agencies often fall into the trap of celebrating closed deals and then immediately committing that income to marketing, software, contractors, and even new hires. But here's the thing. A $25,000 project with a 90-day scope doesn't mean you have $25,000 to spend right now. That's cash flow misalignment, and it's one of the biggest silent killers in creative businesses. Cash flow misalignment happens when the timing of your inflows and your outflows are out of sync. This typically shows up as you're spending money faster than it's coming in the door. It gives you a false sense of security. Your P&L says you're profitable, but your bank balance says something totally different. What you should do instead. Build a 90-day rolling cash flow forecast that tracks cash in versus cash out, not just revenue booked. This gives you visibility into when money is actually available so you can make smarter, more confident financial decisions. Require upfront deposits or milestone payments that fund actual delivery timelines. This ensures that you're never fronting the cash of a project out of your own pocket or borrowing from future revenue. Map income against payment terms, especially for retainers, large projects, and multi-phase contracts. This helps you align project delivery with predictable cash inflow so you're not stuck covering costs while waiting to get paid. Stop relying on your bank balance as your financial dashboard. That's not strategy, that's survival mode. A high balance doesn't always mean financial health. It can mask timing issues, untracked expenses, and future obligations. Mistake number two, you're overpaying for flexibility and it's killing your margin. Most digital agencies rely heavily on freelancers and contractors, and in the early stages of a business, that makes sense. But once you cross over into seven figures, that model starts to break down. Here's the trap. You keep hiring contractors because you think you're saving money on taxes, but what you're actually doing is giving up control. You're paying premium rates for people who aren't fully utilized. Once you hit this level, it's time to start thinking about bringing key functions in-house. Why? Because internal hires give you more flexibility, not less flexibility. You can train for systems, you can prioritize team development, you can build efficiency over time. Contractors work how they want, employees work how you need. If you're scaling and still operating with a 100% contractor model, you're not just overpaying, you're building a business that you can't control. Here's what you should do instead. Review your team structure. Audit your current contractor spend and compare it to salaried equivalents. This helps you identify when you're overspending and whether internal hires could deliver the same or better results for less money. Identify repeatable roles that should be internal, like project management, account management, or operations. Create the job descriptions. These roles are core to the client experience and business efficiency. Putting them in-house gives you more consistency and control. Identify what tasks need to be standardized and can be automated through tech or processes. Automating the right things reduces your dependency on human labor, and that's how you scale without burning out your budget or your team. Start documenting your workflows and build SOPs so when you do hire, you can onboard quickly. SOPs makes hiring faster, training easier, and results more predictable, so you're not reinventing the wheel with every new team member. Think beyond cost savings and look at control, efficiency, and scalability. Long-term profitability doesn't come from cutting costs. It comes from building a profitable business that can operate smoothly and sustainably. The goal is for flexibility to support profit, not sabotage it. Mistake number 3. You don't know which services are truly profitable. So let me ask you something. Do you actually know how much profit you make on each service you offer? Or are you just assuming that if it sells well, it must be working? Because I've seen best-selling offers completely destroy any agency's cash flow. Here's how it happens. Projects take longer than expected. You're adding deliverables that were never scoped. You're pulling in high-cost freelancers to close the gap, and you're charging a flat fee that hasn't changed in 2 or more years. By the time the project is done, your profit margin is gone. It's not just about revenue per offer, it's about delivery costs, time investment, and scope discipline. If you're not tracking labor hours, revision cycles, client communication time, and fulfillment costs, you're guessing at profitability. And here's the real issue. Unprofitable services create cash flow strain. They tie up your team, delay billing cycles, and cause burnout. And yet still, they stay in your service suite because they're popular or easy to sell. That's a dangerous trap for a 7-figure agency trying to grow and scale. Here's what you should do instead. Track profitability per service line and per client over the last 6 to 12 months. This reveals which offers are actually making you money and which ones are just keeping your team busy. Identify which offers consistently underperform and drain your team and investigate why. You need to know if the issue is pricing, scope, process, or client fit so you can fix the root cause and not just the symptoms. Adjust pricing, scope, or delivery method, or eliminate them altogether. Making strategic cuts creates space to focus on your most profitable, scalable services without sacrificing revenue. Build offers that support both client results and operational efficiency. Your services should be valuable and repeatable so you can deliver excellence without draining your resources. Remember, it's not about doing more work. It's about making smarter, more profitable decisions with the work that you already do. So let's review these 3 big mistakes that digital creative agencies make. 1, stop treating revenue like spendable cash. Remember, just because you booked the project doesn't mean you've earned the money. If your expenses hit before the payment's clear, your cash flow will always be upside down. 2, stop relying on contractors for control. You think you're saving money, but you're paying premium rates for people you can't fully direct. At 7 figures, building internal capacity gives you more control, more consistency, and more profit. 3, stop guessing which services are profitable. Not every popular offer is a profitable one. Without tracking the true cost of delivery, you're scaling services that could be silently draining your bottom line. These mistakes aren't just financial, they're structural, and fixing them will change the way your entire business runs. Want to see exactly where your agency is leaking money and how to fix it fast? Download the Financial Clarity Map. It's a step-by-step framework built for 7-figure agency owners who are ready to stop reacting to cash flow fires, strengthen your margins, and scale with strategy, not stress. Inside, I walk you through the 4 pillars of financial success, and each section ends with a clarity move that you can implement right now to create momentum. Just click the link down in the descriptions for instant access. And if you want personalized support, book a financial clarity consult where we'll review your numbers, uncover hidden leaks, and build your custom cash flow plan. Which mistakes are you dealing with right now? I'd love to help you fix them because awareness is step 1, but action is where the money is. I'll see you all next time. Take care.